Hi everybody, Dale here today on the pound US dollar daily chart with another live trade demonstration. Today we're talking about a bearish signal which was discussed in today's War Room chart of the day. The candle in focus is, or the signal in focus is this candle here. It's a bearish rejection candle, but it's also what I call a thick body bearish rejection candle, okay? So the anatomy is it's got a very strong bearish presence. So if I just explain what I mean there is, we can see that the candle tells us two things. Price tried to move higher, that move higher was rejected, and then the candle price moved further lower into the session and closed like much lower than the open price there. So here's that initial rejection there. Okay, we've got that initial rejection, and then we continue to move lower and get that bearish body in the candle's anatomy there. So I really like these thick body signals. I think they have statistically a much better chance of seeing price follow through. That's one big tick for this setup. The other big tick is it's formed at a major level, a major turning point on this chart. Okay, so we can see that previous support here is now acting as resistance, and that has been confirmed again today when price tried to move up into this resistance level and it was rejected, and then we got the candlestick reversal signal, which is our bearish thick body bearish rejection candle here. So okay, so that's our bearish trade setup. Now the issue today is that the plan was to go in with the 50% retracement. All right, but sometimes, and actually quite often, that you won't actually get that 50% retracement entry. Sometimes the market will come a little just a bit shy. Sometimes you'll miss it by 1 pip. Sometimes the market will just linger around near the previous open price. Near the open price of the day and just not do much and then just take off in London. Ideally, the golden entry point is some form of retracement. You're bettering your entry price there and tightening your stop, but you just can't get that all the time. And today, I missed out again. As you can see, that the 50% entry basically was missed by a couple of pips there. So what do? Well, there is a way to get a second chance into the trade before it takes off. All right. So what you can do is you can watch the intraday charts. Your favorite intraday chart, whatever it is, 4 hour, 8 hour, 12 hour even, and watch for further bearish confirmation to align with your signal to give you another opportunity to structure yourself into the trade. Okay, so I'll give you an example of what I mean. So on the 4 hour chart, we can see this here makes up the bulk of the daily rejection candle, and what's basically happening is here's I've missed my entry point. If you can sort of picture that as the daily chart, it's where I showed before, that would be the 50% retracement entry, and you can see there's a bit of a gap there, completely missed it. But now what we've got is a 4 hour rejection candle forming. All right, so that's now showing further weakness coming into the market, and we're in London now, I believe, by 1 hour. So we're in the London session. So the big money's in the market, right? So what I've basically done is I've entered short based off this next level of weakness coming in, this sort of like next phase of this bearish move, and just put my stop above the high that was made for the day. Okay, so this is the high that was made for today's session, this daily candle. So if I go back to the daily candle, you can see here's our current candle. And here's the high. All right, so my logic here is if the market comes back up and breaks today's high and starts making new highs, trade idea is scrapped and just get out of it. Okay, so that's where my safety line is. So if I go back to the 4 hour chart, so if basically you could wait for this candle to close and wait for it to actually form another bearish rejection candle signal on the 4 hour chart, but I've gone a little bit more aggressive and I've just entered straight off the first sign of weakness here to get me into the bearish move. So I've positioned in fairly lightly here because I've really tightened up my stop quite aggressively here, and my stop is in a bit of a a sort of risky area, because initially my stop would have been up here somewhere, which covers the recent market swing high. But today I've with this sort of like aggressive play, I've put my stop in a more vulnerable location, if I could put it like that. So what has to happen now is this bearish rejection that's coming in now on the 4-hour chart really has to play out for this trade to work out. It's either going to work out or not. So I'm expecting this rejection candle to align with the overall weakness we've seen on the daily chart, which also aligns with the turning point of this resistance level as well. So all these factors are stacking up together to build a good case to go short. So you can see I've only entered in with half a lot here, so this is probably only going to be $150 risk. So it's not that much, but I will be targeting fairly generous down here to really milk the trade for what it's worth. So I'm going to target here, which is the next major turning point for this chart. So a major support level for the pound. And if I just zoom out there, we can see that. Actually, I'll zoom back in and we'll just go to the weekly chart, and you can see there that that was a previous floor there in mid-year, and now you can see here it's been a pretty stubborn level as well. So I'm basically expecting a move down back to that turning point if this trade flows through nicely. So that's it for today. I just wanted to give you guys a little bit of insight to how you can work around missed opportunities, that you turn a missed opportunity into a second chance kind of thing. Don't go out and do this every day. Like I said, you're not always going to get that extra intraday confirmation to get you into a trade. Sometimes you just miss the entry point and then the market takes off. There's no 4-hour, 8-hour signal. You can't do nothing. You just missed the trade. But in this case, there was just something to form on the 4-hour chart, and I was able to structure a trade around that, and hopefully that works out. So what I'll do is I'll pause the video, hopefully come back within a few days, maybe 2 weeks or so, depending how long this trade takes to develop. And I'll give you guys an update on the trade. Hopefully we get a move like this. That'll be great. But the market's been pretty choppy of late, so we might have to wait a little bit and sit through a bit of roughness before this actually hits its target down here. Okay guys, I'll see you in the next part of the video. Hi traders, it's Dale, and back sooner than expected. This trade has progressed quite quickly. I thought this may have taken a few weeks, but here we are at the end of the week. It's Friday here, 1:30 a.m. in the morning here, Sydney, Australia. NFPs actually just came out 45 minutes ago, which has fueled this part of the bearish move. And we also had a pretty serious day yesterday when the Bank of England got up and spoke, and obviously they were talking about their their monetary policies and whatnot, and they must have been pretty dovish. Anyway, the market was negative on their responses. I don't really follow the news like that, and a lot of people ask me about this, and it's something a lot of people struggle with. Should you be looking at the news calendar and trying to factor it in? My answer is no, you don't. You just want to try and keep your trading simple. You don't really want to introduce these extra variables that are going to screw with your mind and screw with your discipline and really unhinge you like that, especially the news calendar, where it's something you really don't have much control over. You don't really know what these central banks are going to come out and say. You don't know what the unemployment figures are going to be. They could really go anyway. You can't trade in anticipation of those sort of things. But what you can do is become a master chart reader, become very good at reading a price chart, focusing on things like swing trading and price action trading, opening up a chart and being able to read it and be able to spot good trading opportunities like this one and just play them out. You plan the trade out and then see the trade plan through and become very disciplined that way. You're usually going to find that if you become good at identifying these signals, which ain't too hard at all, that the news volatility will usually align with your trade more often than not. It's only when you trade out of position, you're trading candlesticks that are just floating in the middle of nowhere. Quite often that's where you're going to get hurt by the news, because you're not trading from a good turning point on the chart. You're just trading candlestick fluff in the middle of nowhere kind of thing. So what I usually do is usually look for the market structure first, see what's going on. Is it ranging? Is it trending? Are we in a channel? Are we in a consolidation pattern? I mean, price squeeze pattern where you get these like descending triangles and things like that, these price wedges. Obviously, I focus more on the trending and the ranging markets second. I only will trade the ranging markets like this if we get a very good trigger signal like this thick body bearish rejection candle. And obviously, you focus on the main turning points on your chart as well, and that's really key. I mean, you have to be able to identify and be disciplined enough to only trade from those strong turning points, places on the chart where you can see the market's done a complete 180 and actually made a reversal from before. Trade from those points, and they're basically your major support and resistance levels, especially with these ranging markets as well. You only want to trade from the range top and bottom like this. So I've removed, I didn't catch the whole move here. I just stuck with my plan, and I took profit at this major support level, but the market has kept busting through on through this level anyway and continued on down. So now it looks like the market's going to close down below the range, which is going to set the chart up for further bearish movement. As long as price can stay below the range, we'll be looking for any further sell signals that develop off the range bottom. That tells us the old range bottom will be acting as new resistance, and that's going to be a turning point on this chart. So if there's any retracement from price next week, that's where we're going to anticipate price is going to turn around. So we'll be targeting that area there with the bearish momentum. And yeah, so that's the trade over and done with. Yeah, takeaway points from the video is don't panic about the news. I mean, if you're going to try and avoid news releases and that, you're going to be trading in market conditions with no volatility, and you're going to be caught up in stagnated markets. So usually the news will inject the market with volatility that you need for your trade to reach profits faster. Focus on those major turning points, only plot those support and resistance levels that really matter on the chart, that actually see decent price reversals. And that means staying away from intraday charts and trying to plot levels there and that, because they get destroyed all the time. It's only these major levels that hold strong. So if you ever want to learn any more about swing trading with price action, anything like about these candlestick signals and how I analyze the charts and whatnot, come over to theforexguy.com. Got plenty of videos and articles that will give you a lot of insight to how I trade like this. There's always more coming out as well. So I've got market analysis there that I put up from time to time when I see an opportunity on the charts. So yeah, that's it from me. Hope to see you on the site. Best of luck on the charts for this trading week.